Hello, I'm Jim Epley, President of JD's Tax and Financial Solutions. I want to explain to you how the Obamacare or ACA or Affordable Care Act may affect your tax returns for the 2014 tax year. 2014 has just begun. Now you must have insurance by March 31st of this year to avoid penalties on your tax returns for next year. There won't be any penalties on your 2013 return, but it is mandatory that you get the insurance this year in 2014 so you don't suffer a penalty next year. I'm going to explain to you a little bit about what the penalties are and how they can affect your tax return as compared to the cost of the insurance if you got the insurance. So it's based on what's called bronze coverage, which is the lowest level coverage that's considered qualified coverage for the Healthcare Act. So the bronze coverage is the lowest coverage possible. It would cover 60% of your medical costs. The other 40% are still going to come out of your pocket. This bronze coverage can range anywhere from $1,700 for one person for the year up to $3,800 and beyond if you have a family. So the cost of the bronze coverage is not set in stone, so to speak. It depends on where you live, it depends on your family size, it depends on your age, so there are various factors for this coverage. But I just did a quick calculation and came up with a range of $1,700 to $3,800. It can be below that and it can be above that for sure. So we're going to work with that range. Now, if you have the coverage, you're great, you won't have a penalty. The IRS has given a 90-day window, so January 1 to March 31st is your 90-day window or your waiver. You don't have to have coverage until March 31st. Once March 31st hits, you must have coverage at that point or you will have a penalty on your tax return next year. Now the penalty starts at $95 per taxpayer. So if I file my own return as a single person and I don't have the coverage, the penalty will be $95 minimum. It can go up from there based on my income. It can be as high as 1% of my income up to a maximum of what that bronze coverage would have cost me. So in my case, let's say my premium for bronze for the year would be $1,700. If I had $100,000 of income, 1% of my income is $1,000, which is higher than the $95. So my penalty would be $1,000. Now if I had $200,000 of income, my penalty would be 1% of that, or $2,000. But then again, your penalty is capped, or its maximum is the amount of what the bronze coverage would have cost. So if the bronze coverage would have cost me $1,700, that's going to be my maximum penalty. So it's a bit confusing, but it starts at $95 per person on the tax return. So let's take an example of me and my wife. If we were filing a tax return together, me and my wife, it's $95 for me, $95 for her, and $47.50 for each child on that return. So let's say we have me and my wife and 2 children on the return. It would be $95, $95, half that is $47.50 for one child, half that is $47.50 for the other child. It equates to a total of $285. So our minimum penalty would be $285. So let's look at this bronze coverage again. If the bronze coverage for a family of mine would be $3,800 for the year, that again would be my maximum penalty. So the maximum would be the cost of that bronze coverage, $3,800. The minimum would be the $285. So the penalty will range anywhere from that minimum, $95 per person, up to the maximum, which is the bronze coverage amount. Let's say me and my wife make $100,000 together. 1% of that would be $1,000. That would be our penalty. If we made $200,000, 1% of that is $2,000. that would be our penalty. If we made $300,000, 1% of that would be $3,000. That would be our penalty. If we made $400,000, 1% of that would be $4,000. But then you got to remember, the bronze coverage for our family was $3,800, so that would be our maximum penalty, $3,800. Hope this helps explain a little bit about the penalties, so you can now weigh the costs and you can begin to think with, is it valuable for me to have that coverage, or should I go without the coverage? It is up to you. The government says it's mandatory. It's only mandatory if you want to pay it. It's not mandatory if you don't want to pay it. You'll be subject to a penalty. You'll have to just weigh those costs out, and we're here to help you answer any of those questions. Thanks again for watching. My name's Jim Epley, President of JD's Tax and Financial Solutions.